This is an emergency alert bulletin relative to the market decline this morning, Monday, August the 5th. This morning, markets are selling off sharply as the world comes to a recognition of leverage and the yen carry trade. Now, we've spoken about this previously. This is the leveraging of the markets through the yen carry trade. We'll explain a little bit more about that in a moment with Michael Lebowitz. But this morning, importantly, markets are going to open sharply lower because of the unwinding of this leverage. This is across all risk assets, whether it's the S&P, the Russell 2000 index, gold miners, anything that's been a risk asset trade up to this point will be selling off this morning, with the exception of bonds, which are going to be up fairly sharply this morning, with the 10-year Treasury falling down below 3.7% this morning. And again, yields are plunging as money is rotating towards safe haven assets like U.S. Treasuries, bond prices up across the board this morning. With that, let's bring in Michael Lebowitz to talk a little bit about the yen carry trade and what to do with portfolios today, specifically as this situation goes on. Michael, good morning. Welcome to this Client Alert Bulletin.
Thank you for having me. I think the most important part of just today and how to react is to sit on your hands. Don't do anything. This is going to be a very volatile market today and maybe for a few days, and it has been for the last few days. This is not when you want to let your emotions take over and sell everything. So let's see what's going on. Let's watch the markets. So what is the yen carry trade? The yen carry trade has been going on for 20 something years. According to the BIS, it's a $15 to $20 trillion trade. And it's a very simple trade that is made effective because Japanese rates are at zero. So a hedge fund will go to Japan, borrow money, put a little money down, borrow money at 0%. They then take that money, and which is in yen, and they convert it to another currency, say US dollars, and then on leverage, they buy another asset. Maybe they're buying NVIDIA, maybe they're buying the S&P 500, could be gold, oil, futures. They could be short bonds, long bonds. It can be anything, and it is everything. That trade works well because, again, you're borrowing money at zero, you're earning a return on your investment, and it's leveraged. The problem is when you take that money out of Japan and buy U.S. assets, you're converting yen to dollars. So you're essentially short the yen. The yen is up 15% in the last 2 to 3 weeks. So these hedge funds on a leveraged basis are down 15% times the amount of leverage. So they could be losing 50, 60, 80, 100% of their investment just because of the yen. And when that happens, the Japanese bank will go to the investor and say, we need more collateral. And either the investor puts up more money or collateral, or they have to sell the assets. And I think that's what we're seeing is a forced liquidation. Why is this so apparent? Because it's happening in the most popular speculative short-term trading positions. So what do I mean by that? NVIDIA, Ethereum are two of the ones that are really getting hit, that are trading very closely with the yen. There's a host of others. A lot of the mega cap stock names are getting hit. Bitcoin is also getting hit. The Russell 2000, which has become a very popular long trade just in the last 2 weeks, but that's where the fast money is. The Japanese stock market, another one and if you look at these assets, they're trading very close to the yen versus the dollar. What's doing well are bonds. They're traditionally a safe haven, and that's where money's flowing. Doesn't mean that's going to continue. No, not necessarily. They're very overbought. And that will reverse itself in some point. But for now, bonds are a really good hedge. Gold, last I saw, was down 2% this morning. Oil is getting hit. So this yen carry trade can continue, but most likely what's going to happen is, and I guarantee you, the Bank of Japan and the Federal Reserve were on the phone all night last night. What are we going to do?
A couple of things here real quick. You covered a lot. I want to go through a couple of charts here for people can kind of see what's going on. This is the S&P 500 as an example. Like Mike is talking about, that index is going to open sharply lower this morning. Importantly here, markets were already getting oversold on multiple levels, and now we're going to be deeply oversold here. So again, this is likely an event that is going to be fairly short-lived. And again, this is why Mike's saying don't panic here, kind of sit on your hands. It is very likely that this morning we're going to have a lot of selling come in because of this issue. Markets will start to compensate and realize exactly kind of what's going on. They'll calibrate what this all means, and we could see some actual buying coming into the markets near term. Now, over the last couple of weeks, really last month, we've been talking about this need for a 5 to 10% correction in the markets. We're now in the middle of that correctional process. However, even during that correction, there will be bounces. So again, the reason Mike's saying, hey, sit on your hands at the moment, we absolutely agree with that. Look for a rally here in stocks. There will be some buying that comes in. Use that as an opportunity to reduce exposure if you need to, rebalance risk. Previously in our portfolios here at RA Advisors, we had taken profits in a lot of these mega cap stocks. We had been managing our bond positions for quite some time now. That's all playing out with risk management at this point. So now we have cash. We're currently running about 16% cash in portfolios, as well as our bond positions, only about 53% in stocks. So we've got a reduction in that risk already, and now we can look for opportunities here during the sell-off to rebalance that portfolio and take advantage of opportunities as they begin to show up. But this has been one of the things we talked about. We've been talking about the risk to small and mid-cap stocks. It's not just what's going on in the markets. A lot of people chasing that small to mid-cap sector in particular, and this has been one of the big drivers of this trade. That has now been completely unwound because, again, the fundamentals in small and mid-cap stocks don't support that price increase that we saw earlier this year. Now, from a portfolio management perspective, as you're looking at your portfolio, it is important to recognize kind of where you are. And again, this is the one thing that we tend to do, is that we anchor to kind of this high water mark in the market. And we say, oh my gosh, I'm losing money. Even with this correction, we are only back to where we were in March. Again, the markets had a tremendous run this year. We're going through this correction process. We're simply giving up the gains from earlier this year. So again, this isn't a function of losing money and focus on your portfolio and how it's working. But again, we're simply going through a volatile period here in the markets. Don't extrapolate that into a much bigger issue that leads you to make emotionally driven mistakes. That's the one thing that hurts us the most as investors. Michael, just kind of summing this up, and again, we went through all these markets that are getting hit here across the board. Really, there's no safe place to hide today other than bonds. But I want to be specific here about bonds. We're talking about U.S. Treasury bonds, high-yield junk bonds, corporate bonds that are of lower quality. Those are not safe places to own right now, and those are also getting hit in the markets today as well.
Correct. If you read our daily commentary, we've talked about credit spreads. So corporate junk bond spreads or investment grade spreads, they are getting hit. So junk bonds have outperformed treasury bonds very well this year. They've given up all those gains in the last 5 days or so. So the market investors are flocking to safety, and the truly only safety part of any market are U.S. Treasuries, not gold, not Bitcoin, not some foreign market bonds, U.S. Treasuries. And that's clearly been the case.
If you like this commentary, please like and subscribe to our channel. We keep you updated every morning with our Before the Bell commentary. You'll see that just below here on YouTube. But also subscribe to our daily market commentary on our website at realinvestmentadvice.com. We email that to you every morning before the markets. So we'll be navigating this with you all along the way as we go through this week and kind of what happens next. realinvestmentadvice.com, everything you need to know about the markets and your money. And we'll see you here tomorrow morning for Before the Bell and the next Real Investment Show.